about? We are live. What's going on, world? We are back at you with another episode of the Extraordinary Exchange podcast. I am your co-host, Mr. Nate Bennett.
What's happening, man? It's me again. Hey, listen, this is the first time I've been in the top right corner of the box. Usually I'm at the bottom of the box, so salute. It's Case, man. I just off some random always, but I'm in the top right corner, though.
Moving on up like George and Wheezy. I see you.
A little remix this week.
Little remix. And then the bottom, we got family here. We about to have a great conversation. Brought to you by the good gentleman at Extraordinary Investment Group. Y'all know the vibes. And we got Extraordinary Investment Group member. This gentleman, this illustrious guest we got this evening, is a jack of all trades. From the time I first met him, this dude is very knowledgeable in a bunch of different areas, from the most random stuff to like some of the most pertinent stuff. I've known him well over 20 years now. He's family. He's the chief financial officer of Extraordinary Investment Group. Looks over the money side of the house. When we first started this endeavor back in 2020, he was the host of the biggest financial and stock market room on Clubhouse, if y'all remember those days, called Stock Market Moves. He was the co-host of that. Monday through Friday, he hosted thousands of people online talking about financial literacy, entrepreneurship, stock market, real estate, vehicles. It was all kind of good gems in there. And I used to be at work just taking notes, just soaking up all the game from all the experts in there, him included. So, but again, without further ado, I'd like to introduce the brother, Adam Terrell.
What's going on? What's going on? How y'all feeling today, man?
What's going on, good brother?
I'm finally here. I finally made it to the pod, man. I've been waiting.
Let's go. So for other purposes, we might call this gentleman Benz. I haven't called him Adam Terrell in God knows how long.
That was funny for me. I was a little thrown off for real. I can't even hold you.
This is the government, but he's been known as Benz for all these years. So Benz, welcome to the pod, man.
What up?
And we're gonna talk about the stock market tonight. We're gonna take it back to the basics. Stocks 101. Again, this man knows it inside out, like the back of his hand. I guess we'll just start there, Benz. Give everybody a brief background and how you got involved with the stock market game.
Your intro can kind of lead me into it, actually. You said random information. I read, research, study. If it's something I find interesting, I'm going to learn more about it. That's just how I've always been as a child. As far as the stock market goes in that journey, for me, it was always studying how people with money did with their money. How do these people make money? How do they amass money? That got me into business ownership. And then once you really start to understand the basis of business in the country and how the big business works, then naturally it leads you to the stock market. And probably I've always just been attracted to understanding how money was made, how money makes money. And then probably when I was probably in high school for real, I would come home after school, start watching Mad Money. Kramer's first show was Cosmo and Kramer back in the day.
Mm-hmm.
I used to watch that after school. In college, my roommate Sean, member Sean, used to say, "Why are you watching this all the time?" It was more so just to understand how money makes money and studying what the guys with the money do with their money. And for me, the real story is I randomly had some money and bought some EA Sports stock probably when I was in like the 10th grade. EA Sports, something I knew, something I played every day. Forgot the password. It was E-Trade account. Forgot the password. Came back to it probably 2-3 years later, and it was like 200% up. And I was like, "Oh, look, this is how this stuff works." And then ever since then, I just been stuck and fascinated. Pretty much is the short story of it.
EA Sports.
Yeah.
It's the game. That's what's up.
So with your introduction into stocks, just being interested about money, what is the most important thing that you would tell somebody, I guess, who would have either is interested in the stock market, interested more about money? What's the most important fact about money or the power of money would you tell them to say, all right, um, you have an opportunity to make in life, you can make whatever. The power of this dollar does what?
What I would say is, when you talk power of dollar and stocks, what I would say is this here. America is a capitalist society, and it's based on business. Now, it's very hard for any of us to, on our own, build $1 billion business. In this beautiful country that we have here, it's possible. But it's lot of hard work, a lot of good luck, a lot of timing. The beauty of the stock market is it allows the regular everyday person to be able to become an owner of the biggest, best companies in the world. Living here in America, having access to the US stock market gives you access to the best companies in the world today. And you and I would be hard pressed to build an Apple phone company, but we can own a piece of Apple phone company. And I think that ownership in a business, that participation in capitalism, um, and over time, the way that can grow if you choose the right situations to be in, I think is a vehicle that is unmatched over the history of time. In short periods of time, it goes up and down. But over the course of a long period of time, if you bet on America, believe in the entrepreneurship, that's the easiest way for the average person to be able to access that without, like I say, building your own $1 billion company.
So rewind real quick. You brought up EA Sports. You're only in the 10th grade. You hear a lot of stock market professionals talking about, um, you know, invest in what you know or invest in what you use. What made you? Is that something that you agree with? And what made you at that point say, "Oh, I'm going to go ahead and invest in this," or was it just kind of like you just did it on a whim?
What I would say is before you get to the level of investing in individual companies, you want to understand a business or the business that you're investing in. The easiest way to do that is something that you know, understand, work with. Um, I feel like a lot of us have a lot of intricate knowledge about businesses that we don't even realize that we do. Depending on the field you work in, depending on your interests, people in the medical field, like it's so many beautiful medical companies, medical device companies, um, that you know so much about and don't really know. For example, one of my biggest trades 2 years ago, 3 years ago was Okta, and Okta is a identification company for online access. My job, one day I go into work and they say, "Up, everybody, throw away your old identification, get this Okta stuff." Now I work for a Fortune 500 company. For them to make that change, I say, "What is this Okta situation?" Looked into it. Oh, identification for people working remotely. Oh, people are starting to work home the next 2 years. The theme works for it. Then you look into the company. So that naturally just got thrown into my lap just because being at work, I noticed it. Um, People work all day on Microsoft Teams and understand that. And those type of things that you naturally know, naturally understand, is make it easier for you to absorb when you're breaking down the business because you already kind of understand what they do, how they work, and what their biggest draw is, what drew you into the business, what makes you like it, not like it. A lot of us work in situations we do ordering, business to business. Microsoft's a good example. Business to business things that in your particular niche, you know so much about because you work with it all day, every day. Ordering systems. There's a lot of great software as a service companies that we work with every day in the office, and don't realize we take that knowledge one step further, break it down a little more. It could be a great investment for you.
Something you said in there, interests. Things that you're interested in, things that being curious about those situations. Because again, like you said, we aimlessly go about life, seeing these things, knowing these things, understanding these things. If you just take that one step further and start asking inquisitive questions and being curious and put two and two together, it's right there in all of our faces, for real, for real. So yeah, it's a
And no
great.
matter what your interest is, somebody has figured out how to make billions of dollars off of it, and that company is traded publicly.
Yep.
No matter what it is, if it's social media, It's great social media companies to invest in. If it's advertising, if you want to keep up with the Kardashians, it's all type of media companies out there for you and all type of things. So it's no matter where you start at, there is an investment angle to it if you just go one step further in there.
Absolutely. So you talked about, researching a company, being interested in a company, being interested in business. Like, what are some of the key components that you are looking for or researching in that company?
Part of that starting when you're interested thing is you understand the business. So for me, that's the number one step in any real investment, longer term investment, is I want to understand this business. So just personally, I don't invest in biotech companies. I don't know that that's not my lane. Some guys can do that, trade that, watch the FDA reports because they understand the background of biotech. So to me, the first
Right.
step is understanding the industry. Then once you understand the overall industry, you want to find like the leaders in said industry. Um, After that, little step further down, like look your CEOs, your founders, and what their track record is. Have they been successful before at similar ventures? Is it a founder led company? Has the person still holding on to this company the whole time? Those often your have a little more luck with those just because the person that founded this company cares so much about that company. So if they've been there long enough to found a company, stay down. They're most time your biggest shareholder, and they truly care about their baby. So oftentimes those are what you really want to look for is those founder-led companies. But just generally speaking, once you get past all that and you get a good understanding of the industry, the purpose of business is making money. So then you got to go down to your balance sheet. Are they making money? Are they profitable? Um, and it's a lot of metrics you can use under the umbrella of how profitable this company is over time. And once you kind of understand how profitable an individual company is, then you go back to that comparison level on the industry side because you can't compare a bank to a computer company. The way they make money and how they would be valued comparatively to other companies in the industry varies. So that's kind of the key is you go to that financial side, assets over liabilities, um, how much cash flow they have, pretty much, and how much cash they have on hand to help the business out down the line is the basics of it. Um, and then compare that to other people in the industry, and then that'll kind of give you a ranking of is this a good or bad investment comparatively to other people that are doing the same thing they're doing. And that's kind of what you want is that top dog or that next guy number two that's can take the top dog in that particular industry, and you can find that based on how much money they're making and what they're doing and how good of a shepherd they are with that capital.
Thanks. And you're bringing up industries a few times. For those who don't know, there are 11 major industries.
There are 11 major sectors in the SPY. Yep.
11 major sectors. Right. So, like I said, you got healthcare, you got materials, real estate. Help me out, Ben. Technology, financials, the
Financials.
banks, energy,
Yep.
consumer discretionary. So you got 11 major industries based on, everything that we need to function as a country.
But even still, those major 12 are then broke down into subcategories because you have technology. Under technology, you have some communications companies, so that'll be your Facebook and all them. And then you have your semiconductor companies. Then you have your hardware companies, you have your software companies. So even under that major umbrella, there's still individual niches in. So what I was kind of saying is, you may not know all of the financial section, but you used to work in a mortgage and loan office, so maybe that lending section of that other financials you may have some knowledge in. So those are the kind of things you start with that major industry, and then it breaks down, and you can find that niche where you feel comfortable at.
Facts. All right, let's break it down to the nitty gritty, to your middle school or high school student. Matter of fact, 10th grade Benz, prime example. 10th grade Benz. Let's take it back to him. Explain now in 2023 what the process is of buying a stock. Like, you've done your research, you're like, all right, cool, I think I want to invest in said company here. Walk them through the process, because now it's more accessible than anything. These kids nowadays, we got technology. We can go ahead and set up stuff on our phones. Walk them through the process real quick.
So the number one thing about all this is you got to kind of figure out what your goal is, and then once you kind of figure out what your goal is, you can get to the next level of how to trade that and what to do with it. Um, so you asked about what to do next if you're buying a stock. So pretty much the very first step, once you did your research, you say, "Hey, I want to buy XYZ company." How that really will work out is it's two ways to look at it. Fundamentals and technicals. Now that's also the way you choose your stock, but also let you know when to purchase that stock. So that is one of two. When you that will let you know this here. Some people are chartists, the guys look at the charts, line graphs, and all that, and they can actually find the exact price point where they feel like is a supply resistance demand differential and would be a good price to purchase the stock over the long term. The easier way is over the course of time, you want a dollar cost average into your stock. So you find a good stock that you want to purchase. Sometimes it's going to be up, sometimes it's going to be down, but over the course of time, you'll average that price in. For the layman that just wants to get involved to the stock market, you find a company that you love, that you believe is a good company, has good fundamentals, will grow over time. Don't even look at the price. You want to just over the natural course of time, you'll buy. Sometimes you buy a little high, sometimes you buy a little low, and over the course of time, if that is a truly stock that goes up over the course of time, you'll average into a decent good price. Um, and for most people, that's the easier way to do it. But oftentimes, we feel like we're not buying at the right time. We're buying too high. And so oftentimes, if you're going with that dollar cost average method and you're not want to sit around and look at charts all day, you don't want to sit around and watch the technicals all day. Pick a day of the month, first of the month, whatever day, every other Monday, and buy your $100 worth of XYZ stock, close your eyes and let it roll. Because you've already done your homework and believe in your homework, believe in your research. And over time, you'll average out to a decent good price of that way.
And real quick, Case, before you ask your next question, explain what fundamentals are. You said fundamentals and technicals. Explain for people who may not know what that is.
So the fundamentals are what I was speaking of earlier, are your balance sheets. Your fundamentals of a company is what is the position of this company in the overall market, in the overall industry, in the overall world. Now, many different things can affect that. Um, I had a friend ask me about an oil company recently. So look at the oil company. Fundamental side, the past 2 years, a lot of your big oils made a lot of money. Are actually pretty well run companies. As a shareholder, they buying back a lot of stock. They're distributing a lot of dividends. They're as a shareholder, they're treating you very well. Now, if you go look at the overall social feeling towards the industry, the future of oil, if you look at the political, who wins the election coming up, all these have big important factors on the oil industry. So not only are your fundamentals what you in particular are going on with your money, but also how do you fit in the broad horizon of the future and time of growth for that company. So oil, for example, you have to make a decision as an investor. How do you feel about what the future of oil is? How will the election go? Will that whoever wins the next election, will they be open to continue drilling in Texas? And so it's a lot of different factors to it under that fundamental thing. But pretty much it's the overall basics of how that company functions and itself with its money, and then how it's able to function in a greater society, as opposed to technicals, like I said, and that's more so charting of the actual price, which in the grand scheme of it reflects those fundamentals.
Right.
It's pretty much the visualization of those fundamentals and how people feel about those fundamentals is what technicals is.
Absolutely. So, we're talking about the difference in research. Your fundamental, your technical. Um, how do I, as a new person, try not to fall into the trends that I'm hearing about and go into the fundamental. I need to learn this fundamental knowledge because it's a dangerous game with these trends.
Yes. Now more than ever, do we have trendy stocks, chat rooms, Reddit, all types of things that can run stocks, and honestly, the hedge funds themselves run stocks and create the trends. A lot of that's them doing it themselves. Um, it's hard to avoid, in all honesty, especially if you are trying to stay up in the news, because, like I said, there are active forces trying to put that stuff in front of you, and it's not all bad, to be honest with you. Everything has its risk and reward to it. Riskier things oftentimes have greater reward, and as an individual, you have to understand your own personal risk and reward uh, preferences. And I think that's the key to it all. Individually, how do you feel about what your end goal is? And then how risky do you want to be to get there? Understanding that in this game, the riskier you get, the easier it is to lose all your money. Um, but that's kind of and it's gonna be risky people that try the risky way a couple times and it doesn't work out, and then that towards the fifth time they figure it out. Um, a lot of people go on the trading side. A lot of people go through had to blow up 3 or 4 accounts before they figure out what they're doing. Um, not advocating it, but that's the reality of it. So, but that person that is able to absorb that risk mentally and can continue to work through it can sometimes find reward in it. So, I think that's the biggest thing to you. What to you is you kind of got to find out your own personal risk reward, because some people lose some money and it's the end of the world. Then they get depressed. Their life's over with. Some other people can lose it as, oh, this is a learning lesson. I did XYZ wrong. I will try again next time with a new strategy and eventually work at it. So the Reddit revolts and the AMC's and all that stuff. It's people that made a lot of money and lost a lot of money, and hopefully the people that learned from that experience either way can then use that knowledge in the future, and they know this is a game I want to play or don't want to play, and then this is the right way to do it, the wrong way to do it. But just understanding your own personal tolerance is the key to that trendy world, for real. Because I mean, it's not a bad thing. Some people, I know people that made a lot of money doing that stuff, but it's you got to be willing to take the losses when they come. Is the key to it, and everybody can't do that.
So just to bounce off of that real quick, like, so when I talk about trends and stuff like that, we see people on the internet or whatever social media talk about stocks versus options, right?
Mm-hmm.
Like that's a trendy way to make a lot of money. We see stocks, shares, slow rolling. Can you explain to the people the difference?
Options pretty much give someone an option to purchase a share, 100 shares at a certain price at a future date. Um, because you are because the options are time based, they expire XYZ time. The closer you get to that date that it expires, the riskier it becomes. Because either it's gonna be above the price and you made some money, or it's gonna be below the price, it's gonna be worthless. And so literally, uh, that contract you buy by that date that it becomes that it closes, if your stock price is below that price, which you purchase, is worthless. Whereas though on that share side, it's very rare, especially if you've done your homework that we talked about earlier, that your shares will go to zero. They may lose a lot of percentage. You may have been in the banks a couple weeks ago and they had the bank crisis and your banks went down 20, 30%. Unless you was in that one or two bad banks, they're not going to zero. You know what I mean? Your JP Morgan's got affected because of the banking crisis, but they're not going to zero. Um, and so that's kind of the difference. But at the same time, on the option side, the reward can be much greater. So kind of back to earlier conversation, risk reward. The risk reward scenario, the risk reward scenario in options is a lot greater than it is in the stock. Now I will tell you this: there are a lot of strategies within the options game to help you hedge your stock portfolio. They're a lot safer. But generally, when we talk about trading options, most time it's short term YOLO, trying to make a lot of money real fast, lottery calls, which, like I said earlier, you can hurt yourself bad doing it. There are a lot of people that are very skilled at it. Um, And even kind of like I said about that earlier about understanding who you are. Whether you're a stock person, an options person, whether you're long term, short term, all depends on you, your lifestyle, your tolerance level, how much time you got during the day. It's hard to work a full time job and be a short term options trader at the same time. Um, so like, it's a lot of variables to that to find that place that makes you feel comfortable.
This ain't a game for the week, man. It'll weed out the week, like you were saying. I like to um, relate everything to sports. We all grew up playing sports. I recently just coached my daughter's basketball team, and establishing those goals ahead of time is so key. You know, like you said, get your risk your reward, know what your future goals are. So I had a bunch of first time players, so I told them our goal every week is just to get better. If we win the game, cool. You know what I'm saying? Like if we hit home runs, cool. But that's not the goal. You know, so I remember getting blown out by like 30 points one game, and them looking at the scoreboard like every 5 seconds, like don't worry about the board, don't worry about the board, just stick to being better every play, and they got better and better every game. Till by the end of the season, we won a couple games and barely lost to the number one seed in the playoffs, but down the stretch. So having that game plan and getting better, slower and slower, and working on the fundamentals is the same thing with the stock market game. You know what I'm saying? Like stop chasing those trendy, those trendy option calls, them one weekly calls, and then you sit there with the rabbit ears and you ain't got no money. So yeah, definitely
And
have your game plan, people. Have
and
your
what I tell
game
you is
plan.
what I'll tell you is this for real is like in all honesty, the short term weeklies are the most risky and
Facts.
get the most time get the most
Biggest return.
hate, but they also get the
Hmm.
biggest return, the fastest
Hmm.
return. Your longer term, little less risky, little little less reward, but at the very same time, if bought incorrectly, if bought at the wrong time, if bought right before all the tech crash, all the tech stocks crashed couple months, couple year ago, um, things don't go well that way either. So it's all about just understanding over the course of time that you hope that over the course of time you get it right more times than you get it wrong.
Facts. Facts.
Reducing
So
your reducing your losses in between that. That's the key is reducing those losses when you do get it wrong.
right. Um, you brought up a couple different things as well. Talking about day trading,
Mhm.
um, long-term investing. When you talk about trading, give people like the different styles, because there are different styles of traders. Um, and then also for the long-term investors, um, how can they diversify? Because there's other options with that, mutual funds, ETFs. Can you walk through those and explain how you don't just have to pick one specific stock? You can kind of diversify and put your eggs in a bunch of baskets through mutual funds, ETFs, stuff of that nature.
So what I would say to that is this here. All the stuff that we talked about earlier today was hard. Um,
Right.
picking companies, breaking down industries, that takes time and effort. It's not for everybody. It's not for most people. Um, I like I said, I enjoy it. I find it interesting myself. For the average person, the ETF route, the mutual fund, even though I will get to that, is that's the way to go. And that's pretty much you investing in a basket of stocks that is curated by someone else, money manager, or they're all in a particular industry. You can invest in a ETF for solar energy ETF if you want to invest in solar. Um, that you feel like the solar is the future. Don't necessarily know the difference between your end phase and your sun run, and don't feel like doing all the difference between those two companies. You can get an ETF. iClean's one of them, and it has somebody who's a expert in that area in picking stocks will pick the stocks for you, and you can buy one particular stock as the basket of all those solar energy stocks all together.
And really
Um,
quick, Benz, before we go any further, we throwing out names out there. Everybody, we are not giving out financial advice. We need to get the disclaimer. The disclaimer.
yeah, no financial advice. Yeah, but to yes, I'm just giving you examples of companies that are out there. Do your
Right, right,
homework,
right,
do
right.
your own research. No financial
Absolutely.
advice. But Enphase is a great company, by the way. Check it out. But that being said, it's if you go that ETF route, so for example, uh S&P 500. Most time when you hear somebody say the stock market went up or down, they're talking about the S&P 500. S&P 500 is a curated list of your 500 biggest companies in America. Have to meet certain qualifications to be considered that. They put them on a list. That list changes. If you're doing good, you get a bigger sizing. You're doing bad, they kick you out and get another company in there over the course of time. So they're always constantly updating the list, bringing companies in, bringing companies out over the course of time. And pretty much the S&P 500 is America. Um, so if you're somebody who says I want to invest in the stock market, don't have time to pick stocks, S&P ETF, which would be the SPY, is pretty much all those stocks together. You can have one purchase, one price, and buy the 500 most well-run companies in America. Um, that's a great one to dollar cost averaging over time. Look at it historically, it goes up over time, and you'll be able to invest um, non-actively by still get a return in the stock market. So that's kind of the way that those ETFs work. Now, a mutual fund is more so an exclusive group um, that has a more active manager. Um, their fees tend to be higher on top of those, and with the easy accessibility of ETFs nowadays, unless you got 7, 8 figures and really want to pay those high fees, it's not really worth it on the return. Um, Now, if you got enough money, go to J.P. Morgan and get yourself an actively, a mutual fund. Who am I to tell you not to? But the reality for the average person, the ETF route will give you the same amount of diversification that you're looking for, the same amount of somebody else knowledgeable running the money for you, without that everyday grind of looking at charts and or balance sheets and stuff like I do all the time.
Absolutely, absolutely. Let's talk about the impacts of events. You had talked earlier about stocks being affected by the tech crash or whatever it may be. Let's talk about the impact of global events on the stock market. How often or how fickle can something happen around the world that causes the stock market? Is it, obviously like wars drive war stocks, that's just the stocks in itself. But how do geopolitical or global events impact the stock market?
Simply put, the stock market is the overall the SPY, the S&P 500 is the overall view of of 6 months or so ish of the future of the belief of the view of 6 months or so in the future of the country. Is the pretty much easiest way to surmise that. So right now, the things that are issues to the stock market are the same things that are issued to everything else in the world. Whether it's the war in Ukraine, whether it's political situations, whether it's uh, global warming, all the things that affect how one may feel about the future 6 months or so is from now is what's reflected in the overall biggest stocks in the country, which would be that spot. And it could be any event. In all actuality. So oftentimes when you hear me talk on the calls on Tuesday, I'm talking about political stuff. I'm talking about millions of other things that aren't necessarily stocks in and of themselves, but all these other things affect stocks. Um, Elections are prime one. Elections, the who wins the presidency. People have beliefs about if this guy wins or this guy wins. They like and favor these different industries. I was talking about oil earlier. Oil's an easy one. Whether a Republican wins or Democrat wins next time, the belief of who's going to win that election, like I said, 3 6 months beforehand, will affect those oil stocks, 100%.
Right.
Um, so like and then when the event happens, oftentimes we now know the news and then we can sell off because now we're looking at what the next thing is. But the lead up into that, we believe XYZ is going to happen in the future is kind of what affects the stock market now. So right now, instantly today, it's the interest rates, the overall economy. Is there an upcoming recession? And every single day, when you see the stock market moving in this kind of environment that we're in right now, it's based on, do we believe a recession is upcoming a couple months from now? And traditionally, the stock market's on the bottom before the recession starts, right before the recession starts, because the investors have gotten wind the recession is coming. We've sold off. We got scared. We're at the bottom. Recession comes, and now we're pricing out the back end of the recession because the market's forward thinking. So pretty much everything else that affects anything is reflected in that S&P 500 or the overall stock market.
And for real, some of the key words you were talking about is the belief, because for real, all this is perception and your social standing in the company. A lot of times, it's not based on those actual figures in the balance sheets. A lot of times, it's your public perception and the standing of what people believe is about to happen. For real.
And I'm gonna tell you, most time, if everybody believes something is gonna happen,
right,
it's not what happens.
It don't even what happens.
Especially if it's something bad is gonna happen.
Wow.
If we all believe something bad is about to happen, the powers that be are gonna prevent it from happening because we all know it's gonna happen. Y2K. Y2K is the prime example.
Ooh.
If we the fact that we all were preparing for Y2K in 1997 made it not happen. You know what I mean? Because if we all say, "Oh, this could be a problem," and by the time we got enough smart people out here in the world, most time by that thing that's gonna we all think is gonna be the end of the world. By the time we get there, we didn't figure out how to prevent that.
I got a high schooler and a 9-year-old. Are they teaching about Y2K in school books and the history books? Because that was a real thing.
A real thing.
It's a
real thing. But these type of events happen all the time where the average person thinks, "Oh my God, XYZ is going to happen," but because even the recession we're talking about right now in and of itself, we've been talking about a recession coming for 2 years. So for a recession to actually happen, something has to go terribly wrong, or the Fed actually has to make it happen because that's what they want to happen to cool off inflation. Different conversation, but naturally, a recession wouldn't occur if we all know recession's coming. That's not how it happens. Most time you have a housing crisis. You have a unknown event occurs. You have a virus that comes from China and they put us all in the house. That's the real black swan events. Nobody knows it's coming. Oh my God, what are we going to do? Then you have that. But the things that we all see coming, most time we can prevent. So, like you said, it's about belief of what's going on, but that don't necessarily mean what's going to go on. So, you kind of got to roll with the movements and how they go.
Cool. We another term you threw in there a few times that people may not be aware of. 10th grade Benz might not have been aware of at the time. Yeah, that's what we're going back to, man. That's who we speaking to the 10th graders right now, the high schoolers, the next generation. Because within E.I.G, our investment group, education and smart financial strategies, we're educating our youth and giving them the game that we didn't have, that wasn't really readily available to us. So yeah, that's the genesis of why we do what we do. But dividend. You brought up dividends a few times. Explain what a dividend is to the 10th graders.
All right. So earlier I talked about balance sheets. So pretty much on your balance sheet, all your money coming in is your revenue. All your money going out is your expenses. Money left in between, that's your operating capital. Over time, if you don't use that operating capital and you gain money, you have cash on hand. Companies have money on hand. Now, with that money on hand, you want to use that money to help further the business. One important thing that we have to learn in our community about, back to earlier, I was talking about the ownership of stock and why it's important, is we're used to being consumers. So when you go into the store, you go into your local place, they're going to say the customer's always right. So we feel like we can go and get mad and say, "Oh, my fries were cold, give me some new fries," because you're the customer. And that's what the manager's going to tell you, "Customer, you're right." When you go to the McDonald's corporate office and go above that in store, it's all about the shareholder. what can we do to make our shareholders happy? The people that own this company, what can we do to make them happy? One of the ways they do that is give you a little bit of money here and there from that cash they have in reserve. Those will be dividends. Different companies handle dividends differently. Some do quarterly, some do yearly, some don't do it at all. But one of the ways that companies reward the people that own the company is send you a little check every once in a while, as a part of that money that we hold. Now, some that's a whole different conversation. But some people are dividend investors and they like to stack dividends and look for those dividends. Um, but a high dividend doesn't always necessarily mean the company's doing the right thing with their money. Oftentimes paying that dividend, if you're not making any money, is actually hurting your company. So there are a lot of older companies that will try to attract investors um, with higher dividends because they want people to invest in them. But in actuality, those dividends probably should be going back into the business. A company like Apple pays a little slight dividend, but in reality, they keep all their cash on hand to help build the brand, advertising, and those type of things. And as a shareholder, if they're doing their work on that side, that increases your value as well. So you might not always necessarily want to get your dividend every month. You more so would like them to build a new product. Um, as an Apple shareholder, I want to see the new VR set. I want to see the new whatever the case may be. You can save that extra 12 cents you're going to send me and go ahead and spend some money on rolling out the next product, the next generation of the product. So that the dividend is a good tool. Um, Overall, what I would say is they're more so for an investor to search for dividends, more so for an investor with a larger portfolio, um, to get a larger return on those dividends. The dividends aren't a whole lot of money, uh, and so therefore you need a lot of shares to really receive a serious dividend. Now, on a longer term investment, for me, a dividend is a plus, not necessarily looking for one. But if it's there, it's a plus, and I know I'm holding it over time, and those monies help compound and buy you more shares later on down the line. But another thing, though,
Absolutely.
while we're there, though, is with that money, another way they help shareholders is actually buy back stock,
Hmm.
and that's a kind of controversial topic right now. Elizabeth Warren Senator doesn't like when companies do this because why you want to be on the shareholder side is not only are you aligning yourself, the company's looking out for you. The other big shareholders are the people who run the company. So therefore, when they do things to improve the stock, they want to improve the stock price for their shareholders. They're talking about themselves. So Elizabeth Warren gets upset when they do share buybacks. So what share buybacks are is we're going to spend some of that money as a company and buy some of those shares back ourselves to reduce the amount of shares that are available, causing stock price to go up most times. And so that's what Apple does with that. So back to Apple. Apple's dividend is not that great, but they're great at buying back their shares to reduce that float, um, to help the shareholders maintain a higher stock price. So there's a lot of ways to do that.
That's real, man. So, sheesh, man, you giving the people a lot. You're giving the people a lot. Let me ask you, um, in your personal opinion, um, what is the best strategy for a beginner?
Nowadays they made it so easy. That's the beautiful thing about being a beginner right now is the democratization is the buzzword of investing. Um, because with like I talked earlier about ETFs, now pretty much you can buy uh, smaller share portions of stocks. Um, you don't have to buy $1,000 Mercado Libre stock. You can go get $10 worth of it. So it's a lot of they have made it easier to do that. So I saw that to say this: you have to find a comfortable platform which you feel comfortable with to purchase your stock. There's many of those out here, some better than others. A simple one is that will allow you to invest over time, put yourself on a schedule, and don't worry day to day about the stock price fluctuations if you are in a comfortable position as a new person. And I think that's the biggest thing is it's 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 also an emotional game. So if you're looking at your Robinhood every single day, it's gonna and you don't really know what you're looking at in that experience, it's gonna be some days that you're gonna be upset and sad. I done lost 50% of my money today. Um, and that can get you out of the enthusiasm for investing. And so that's what I don't want. That's what my number one encouragement is if you start that kind of like 10th grade me, buy some stock, forget about it. Come back to it. Don't look at it over a course of time. And you'll be amazed at what happens. If you sit there and watch it every single day, trade it out every day, you can very easily discourage yourself from the profits that can be had later down the line. Um, because nobody can predict what's going to happen tomorrow. Nobody can predict what's going to happen next week. But a realistic person can say 3, 4, 5 years from now, I'm probably going to still be buying new iPhones. You know what I mean? And so like that's the easier way to do it, and not necessarily get your trick. Don't trick yourself off the block. Is really what I'm trying to say. People trick themselves out the game easily
Yep.
because they let a 1 day, 1 week, 1 month situation deter them from their own greatness.
And that goes back to establishing those goals ahead of time. No, and scoreboard watching. Back to that basketball analogy. How many times, like when we got blown out that one game, that next game when we got down, they were like, "All right, we've been here before. This ain't nothing." You know what I'm saying? They weren't looking at the scoreboard, and they wasn't getting outside of themselves, starting to shoot 3-pointers from the half court, trying to get back into the game. Nah, we just did. Don't watch the scoreboard. Do the little things. Practice those fundamentals over and over and over again. And then when we look up, a year down the line, it's like, oh man, I wasn't even tripping off of last week. I wasn't tripping off that bad month. I wasn't tripping off the ebbs and flows that go on, not just in the stock market, in life. You know what I'm saying? So yeah, that's
One of my greatest. You told the story the first time, and I didn't want to get in my own story time, but you came back
no,
to
you
it.
could.
I got to go to
Break
it.
it
So
down.
one of my greatest accomplishments in life. Um, when I was coaching football. I was coaching at shout out Northwood Rams. That's my guys over there. I had a team that won 0 games one year, and
You said 1 year?
and 1 year we went
No
no
wins.
winless the whole year. And I
Terrible
had
game.
about 3 or 4 weeks into the year, as you said, I gave up on whether or not we're going to win this football game. This week we're trying to reduce the pre-snap penalties. Can we get lined up and not jump off sides? How many times can we reduce that every week? Can y'all line up the right way and not be able to snap the ball? Then it was, oh, now that we can line up properly, can my quarterback and center exchange go down properly? Those little things over time. Once we reduce those little errors over time and charted them. Hey, this week we only had 1, 2 penalties that we've had 4 or 5 last week. We're getting better at that. Though cleaning up those little things over time, that same exact team that won no games won the championship the very next year. Same kid. I had one new kid the next year. Um, and so like, but it came from my kids were the youngest kids out there, didn't know how to line up, didn't know what they were doing, helped them fundamentally through that process, and they were able to overcome and win the championship the next year. Trading, life, everything's the same thing. Um, Constant repetition over time, understanding what you did wrong, improving on what you did wrong as a trader and as any other thing you will do will get you where you want to go. It's just a journey sometimes for certain things.
And another layer to those stories, right? As you're losing and you're focused, you got your goal. All right, we're going to do this. You got the outside noise. You got the parents coming up to you. You know what I'm saying? Oh, man, what are you doing? You got other people in your ear telling you about other stocks. Oh, no, jump that. You saw what it did last week. You need to go ahead and jump on this. If you can put them blinders on and stay focused, stick to your game plan and stick to those fundamentals, it's a beautiful game, man. It's a beautiful game.
Trading in the Zone. Michael, I can't remember the name of the author. Trading in the Zone is a great book. I recommend it for everybody about this particular topic. And it's pretty much about before you start to on the trading side of things, higher risk, higher reward. The key to lock yourself in there is before you even get to that table is your own mental stability. You got to be locked in mentally, and you have to understand what you want to do even before you open your computer up that day to trade. Um, and you have to get in that zone to trade. And if you're not in that zone today, don't trade. And he kind of breaks it down how to gauge yourself whether or not you're in that proper space to do stuff. And I feel like that's another big thing is another case of deterrence is we feel like once you get to that trading side and you do make a good option play, you do make some money. We feel like we got to trade every single day, all the time.
Mhm.
And sometimes the play's not there, but you gonna make a play.
Right.
And we get caught in that rut of what it is, and the the key to get out of that cycle is understanding yourself in your situation. So I think that's just the biggest thing I want to say about all this stuff is you got to understand yourself and understand what you want to do and map a way out to get there. And don't get deterred if you get off, but get to that point.
Mark Douglas. That's the author of that
Mark
joint.
Douglas, there we go. Who knows
Mark
him?
Douglas. Yeah. And you just segued into my next question. I was going to ask you what where can people go? I mean, we all, go to YouTube University, study at the University of studying Googleology. You know
Mhm.
what I'm saying? What are some places people can go to stay up to date with either these companies, the stock market, or just learning about stock trading in general?
One of the best free
Here you go,
apps.
free as
One of the
well.
best free apps, easy to use. Yahoo Finance. Yahoo Finance has great charts. Um, the financial information on companies is little. It's not up to date because it is free, but for the basic level, I'm trying to look something up real quick. Yahoo Finance is the perfect. I need information on stock market, what's going on with a particular stock. Um, the next level of that would be once you do choose a broker, individual brokers, um, the difference between the brokers is the level of information they have for you. E Trade, Power E Trade has a lot of different information in it for you if you want to be technical about the stocks. What I would say to you though, Bennett, is the number one way if you want to understand a particular company, quarterly earnings calls. You got so back to the earlier process of you found a company you like, you see what's going on, you look at the numbers. If you want to know what's really going on with a company, listen to that quarterly earnings call. Um, every single quarter, company comes out with their financial sheet, what's happened this quarter, and they'll come and talk to their investors about X, Y, Z is what happened this quarter. This is why we made money. This is why we lost money. This is our thought. This is our projection for next year, next quarter, next year. They're going to also give you um their what they are afraid of and what they're excited about. And once you get used to listening to the same company's delivery, you'll know by the tone of the voices and what they're talking about, is it good or not? Is this real? Is this something really to be excited about as an investor? Um, and the key to that is most of those the first 10, 15 minutes of them reading their uh pre-made statements. And of course they're gonna give you the best stuff.
Right.
At the end of the call, though, you get the investors who call in. Hey, so this quarter looks like you're a little light on your imports. What's going on? And that's when you get the real sauce, um, because they are investors like you who are
Right.
looking for information, and they're a lot more seasoned, and they know what they're looking for. And if you are on that call from whatever house, your job is to study this company, so you know what you're looking for in that report. So you're going to ask those questions that the educated investor would want to ask. So for me personally, that's how I really get to understand those companies that I truly love and like look at is getting on those earnings calls and really getting the minutia of what the CEO himself says, what the CFO says himself about what's going on this quarter and what they're trying to improve on, and that'll help me be a better, not a more knowledgeable investor myself.
It's absolutely real. It's absolutely real. I don't have no more questions. You done educated me about the stock market. I'm good. Like I'm ready to, if I was 10th grade case, you know what I'm saying? Find me to the Robin Hood or the Wheat Bull or the trading platform.
And
I was gonna say, give them some trading platforms too. We didn't really talk about some of the good trading platforms they can use.
So Robinhood is controversial. Robinhood is not bad. Robinhood's not bad. It's not the best. It's very user friendly. The user interface is very beginner friendly,
right?
And so therefore, I don't want to poo-poo it, because if you're a brand new person, first time looking at stuff, it'll be easier for you. It's a good place to start. Now, I hate the charts over there though. The charts are designed to make you think something's going crazy, and so it don't get. But as far as everything else goes, the option chain is nice, but there is no data about those companies. So once you really want to get to that next level step, you do have to go to your higher level platforms. I like E-Trade's a good mix between both. We use Webull. Webull is a great place for sign up to get an account. A lot of free stocks. We'll put the link to the Webull account down here if you want to get 20 free stocks. Tap in with the Webull account. And what we can do with that, like Webull is a good place because the option chain is mapped out real well. So that will allow you to, if you really want to go to the option side of it, there's a lot of variables and options that I don't need to get into now. But the Webull, the option chain is laid out pretty. E-Trade, power E-Trade if you really want to go to that next level. But I would kind of stick to Robinhood for the beginners. Then once you're ready to step up, Webull or E-Trade is kind of the basic that I would recommend myself. But in reality, it's about comfortability. What are you comfortable with? That's the best way to find one, is go through all of them, test them, try them. What feels best and most comfortable for you to do. They're free to sign up for. They free, put a couple of dollars in to make a trade or two, see what happens, and see what you like best. I would say, but find somebody that has a good customer service and information for you to be able to learn from. My basic two things to look for.
Yes, sir.
That's real, man. So I might wrap up another episode, man.
Say you didn't put the battery in a whole bunch of 10th graders' backs right now. They're like, all right, ready.
It's
they got a lot of good information. They got that foundation. You know what I'm saying? Again, they can do their own research. They can look up that book, another book that doesn't really break down the basics of investing, but the How to Make Money in Stocks by William O'Neill is another good book. And Benjamin Graham's The Intelligent Investor. I know that one helped me on my investing journey. So
Benjamin Graham got a couple good books out. And kind of how we started the conversation off with how I even got here myself.
Being curious.
You got to be curious, and you got to find a passion. And no matter what it doesn't have to be stocks, young 10th grader. Find something that you love and you want to do, and immerse yourself in that. And while doing that and understanding that, the investment opportunity will present itself. For me, it just happened to be stocks itself. But whatever that thing is that you like, immerse yourself in it, become an expert in it, learn as much as you can about it, and the investment opportunities will be evident once you get to that point.
And anybody that's ever been like insanely curious about anything has been successful in it for the most part, because you're going to continue to get better. You're going to continue that journey of improving, that 1% better every day, as we hear people talk about. So yeah, man, it's been a beneficial podcast episode right here, man. This I don't want to rank them against everybody because everybody brings amazing value, but yeah, this is one people going to save. So they're definitely like, share, recommend it. If you found value in this, don't share it, don't hoard it. We in that information age where a lot of youngsters, are sharing that information. They're not holding it like, maybe previous generations did, because they understand there's enough room at the top for everybody. So yeah, definitely share this podcast. Tap in with us at the Extraordinary Investment Group, at Invest with E.I.G on Instagram. Extraordinary Investment Group, Extraordinary Business Solutions as our merchant services side. Tap in with the brothers. We're only 3 of 12. It's 9 other gentlemen in our investment group that's doing amazing things, building this legacy that's bigger than ourselves for our families. So yeah, man, tap in with us.
And just me personally, I'm always available. I love that this is what I do. So I like to talk about these subjects. Anybody need any help or anything, you can feel free to tap in with those socials, and they'll get you to me some kind of way. Real quick before we go, I just want to say to y'all two guys, man, y'all, I love what y'all got, what y'all doing. Y'all done built y'all done made the pod. I remember the day the pod was like an idea. So now
Right.
the pod up, and y'all really doing it. So keep on cooking. Shout out to you brothers for doing this, doing a great job with it, and then hopefully I'm invited back sometime soon.
We definitely got to do a part 2 of the joint. Definitely got to do a part 2, get a little more in depth. I know we're gonna go over options. We're gonna go into other intricacies of the stock market game. So yeah, for sure. You got too much knowledge not to come back on the pod, fam.
Hey man, I'm always available. Like I say, most time people don't want to hear what I gotta say. So if you guys want me to talk, I can talk all night. So I'm with it.
Let's get it.
All right, brother. I appreciate you. I appreciate your time, man. Thanks for coming on the show.
Thank y'all for having me.
Peace.